Business owners in Uganda have been benefiting from savings and credit cooperative societies or SACCOs to help them expand their trade. Now, SACCOs generally offer lower interest rates to members compared to normal bank rates. Members of Parliament are now pushing for more stringent regulation of these SACCOs.
2 years ago, Jen Kiwanuka was struggling to access funding for her cash-starved chicken business. The farmer based in Kampala's Mukono district says she approached several banks, but none was willing to give her credit without collateral. Kiwanuka then signed up with God Alive Financial Services, a savings and loan cooperative, and was able to borrow $28 to pump into her business. When she started out, she had only 40 chicks. Now she has over 400 layers and sells at least 21 trays of eggs per week, which earn her about $200. Kiwanuka also keeps pigs and grows bananas and other crops. My income has really increased. Before, it was impossible to buy chicken feed on credit. The dealer would say they need cash to restock. Today, I get chicken feed whenever I need it because I can easily borrow money from my SACCO. Also, I'm motivated to work hard so that I can expand my business. I first started with young layers, but now I deal in both mature and young layers, and I'm growing my business. Small loans are helping millions of Africans as microfinance institutions expand on the continent, empower micro-entrepreneurs, and alleviate poverty. SACCOs generally offer tiny loans at lower interest rates compared to banks, using members' savings as security. Microfinance has been around for decades, but has mushroomed in recent years, especially in Asia, where more than 100 million people have access to microcredit. It has become increasingly popular in Africa, with Uganda being one of the countries with the highest uptake of the model.
People do not have security, they live to us, but they guarantee each other. By this, we are supporting them. Someone comes without much, but they have a business they can sustain. So with growth of that business, they will later have security, because when the business grows, they acquire assets. So you find after being a group borrower, they will come as individual borrowers, because at this point, they will have assets as collateral. So we support them from scratch. Someone comes for 100,000, grows. By the time they're on the 6th cycle, they've really grown. They have assets, they can support themselves, and they can have collateral.
Members of Parliament have been pushing for new regulations in the country, saying SACCOs have been operating without comprehensive regulation, leaving the money of millions of depositors at risk. Under the new regulations, SACCOs will need to carry out annual audits of accounts and introduce stringent measures aimed at protecting the savings and members' share capital.
We are going to see challenge of integrating technology in a positive sense, because technology has a way of being predatory. It can pick out only the good ones, but you want it to benefit the whole base. So going forward, technology is coming down, smartphones are everywhere, apps are becoming apps. People can even hack into the system and steal it, because the SACCO may not have adequate money to hire an ICT consultant to secure their system. So they need to link up to learn the good practices to benefit from the big advantage from the big actors, but without killing them. So integrating technology is going to be very key to determining the future of the SACCO industry.
A 2012 report from the World Bank showed small and medium-sized businesses have a capitalization of between $3 to $15 million. And they make up to 80% of Africa's private sector and contribute 50% of the new jobs in sub-Saharan Africa. Janet Chapia, KTN News.